Have you ever found yourself staring at your tax forms, scratching your head, wondering if there's any way to ease the burden? Well, what if I told you there might just be a surprising solution hidden in the everyday dynamics of family life? Hey there, folks. Welcome to my channel, AIpreneur. Today, we're diving into a topic that might sound a bit unconventional, but could potentially save you a good chunk of change come tax season. We're asking the question, is it true that paying your parents' rent can save you on taxes? Let me take you back to my childhood. Like many of us, I grew up learning the value of money from my parents. But as I got older, those lessons evolved. Discussions around financial responsibilities shifted from allowance negotiations to more complex matters like budgeting, saving, and yes, even paying rent. Fast forward to today, and here I am, an adult facing the maze of tax regulations. And in my quest to find every possible deduction, I stumbled upon an intriguing concept: paying rent to your parents. But does this seemingly simple act really have any tax-saving benefits? Or is it just wishful thinking? I decided to dig deep into the world of taxes to uncover the truth. And what I found might just surprise you. Now, before we dive into the nitty-gritty details, let's get one thing straight. I am not a tax expert, so take everything I say with a grain of salt and always consult with a professional before making any financial decisions. Armed with this disclaimer, I sought advice from tax professionals to understand the ins and outs of claiming rent payments to parents as a tax deduction. And let me tell you, the answers were as diverse as they were enlightening. Expert 1. Legitimacy and documentation. Stresses the importance of legitimacy and proper documentation when considering paying rent to parents for tax purposes. They emphasize that the arrangement should be treated as a formal rental agreement, with all the necessary paperwork in place. This includes drafting a rental contract outlining the terms of the agreement, such as the monthly rent amount, payment schedule, and any additional responsibilities or conditions. Additionally, keeping meticulous records of rent payments is crucial to substantiate the arrangement in case of any IRS scrutiny. Expert 2, IRS scrutiny and compliance. Highlights the fact that the IRS closely scrutinizes transactions involving family members, especially when it comes to claiming deductions. Therefore, it's essential to ensure full compliance with tax regulations and guidelines to avoid any potential red flags. This includes accurately reporting rental income on tax returns and adhering to all relevant tax laws applicable to rental properties. By following proper procedures and maintaining transparency in financial transactions, individuals can minimize the risk of triggering an audit or facing penalties from the IRS. Expert 3, weighing benefits and risks. Offers a balanced perspective, emphasizing the need to weigh the potential tax benefits against the inherent risks and challenges associated with paying rent to parents. While there may be opportunities to lower taxable income and reduce overall tax liability, individuals must consider the broader implications, such as the impact on family relationships and the potential strain it may place on familial dynamics. Moreover, they caution against entering into such arrangements lightly, advising individuals to carefully evaluate their personal circumstances and consult with financial advisors or tax professionals before making any decisions. Overall, the advice from tax professionals underscores the importance of approaching the idea of paying rent to parents with caution and diligence. While there may be potential tax-saving benefits, it's essential to navigate the process carefully, ensuring compliance with tax laws and maintaining open communication with family members to mitigate any potential risks or conflicts. By seeking guidance from experts and taking a thoughtful approach, individuals can make informed decisions that align with their financial goals while preserving familial harmony. So, what does all of this mean for someone like me? Eager to maximize my tax savings without getting on the wrong side of the IRS or causing any family drama? Well, it's time to break it down. On one hand, paying rent to your parents can potentially lower your taxable income, thus reducing your overall tax liability. Plus, if your parents are in a lower tax bracket, they might end up paying less tax on the rental income they receive from you. But on the flip side, there are several hoops to jump through to ensure that the arrangement is legitimate, from drafting a formal rental agreement to keeping meticulous records of payments. It's not exactly a walk in the park. And let's not forget about the potential impact on family dynamics. While many parents might appreciate the financial contribution, others might feel uncomfortable accepting rent from their own children. While there can be potential tax-saving benefits to paying rent to your parents, there are also several disadvantages or challenges that individuals should consider before entering into such an arrangement. First, strained family relationships. One of the most significant disadvantages of paying rent to parents is the potential strain it may place on family relationships. Money matters can often be a sensitive topic within families, and introducing a rental agreement between parents and children may lead to feelings of resentment, inequality, or tension, particularly if the terms of the agreement are perceived as unfair or if there's a lack of clear communication and mutual understanding. Second, legal and financial implications. Entering into a formal rental agreement with parents entails legal and financial obligations for both parties. Individuals paying rent must ensure compliance with rental laws and regulations applicable in their jurisdiction, including tenant rights and landlord responsibilities. Additionally, parents receiving rental income may need to report it on their tax returns and comply with any relevant tax laws, potentially complicating their own financial situation. Third, risk of IRS scrutiny. Transactions involving family members, such as paying rent to parents, may attract closer scrutiny from the Internal Revenue Service, IRS, to ensure compliance with tax regulations. If the arrangement is not adequately documented or appears to be a tax avoidance scheme, individuals run the risk of triggering an audit or facing penalties from the IRS, leading to additional stress, time, and financial resources expended on resolving tax-related issues. Fourth, financial dependency. Depending on the financial circumstances of both parties, entering into a rental agreement with parents could create a sense of financial dependency or reliance on parental support. While some individuals may view paying rent as a way to contribute to household expenses and demonstrate financial responsibility, others may feel pressured to do so out of obligation, potentially impacting their own financial independence and autonomy. 5. Impact on government benefits. Individuals receiving government benefits or assistance programs may need to consider how paying rent to parents affects their eligibility for such benefits. Rental payments could be considered as income and may affect eligibility criteria or benefit amounts, potentially leading to unintended consequences or loss of crucial financial support. Ultimately, it all boils down to communication and mutual respect. Openly discussing the idea with your parents and reaching a consensus that works for everyone involved is key. So, what's the verdict? Is paying rent to your parents a viable tax-saving strategy? Or is it simply too much hassle for too little gain? Well, like most things in life, the answer isn't black and white. It depends on your individual circumstances, your relationship with your parents, and your willingness to navigate the complexities of tax law. But one thing's for sure. By asking the right questions and seeking guidance from experts, you can make informed decisions that set you on the path to financial success. As I wrap up this exploration into the world of taxes and family dynamics, I can't help but feel grateful for the opportunity to learn and grow. While the idea of paying rent to parents may seem like a mere financial transaction on the surface, it's ultimately about much more than that. It's about fostering open communication, navigating complex relationships, and finding creative solutions to everyday challenges. So, whether you're considering paying rent to your parents or embarking on any other financial endeavor, remember that it's not just about the numbers, it's about the journey and the lessons learned along the way. And who knows, maybe by exploring unconventional strategies like this one, we can uncover new opportunities for growth and prosperity, both personally and financially. So, as you navigate the twists and turns of life, don't be afraid to think outside the box, challenge the status quo, and embrace the unknown. After all, it's often in the most unexpected places that we find the greatest rewards. With that said, I want to extend a heartfelt thank you for joining me on this journey. Your support and curiosity mean the world to me, and I can't wait to continue exploring new topics and ideas together. Until next time, stay curious, stay adventurous, and never stop seeking knowledge. Take care, my friends.